The Federal Reserve, the central bank of the USA, is now on the verge of putting together massive bailout packages. German banks even say here that they probably have no other choice left. The US bond market is on the brink of collapsing. For Bitcoin, this is the perfect scenario if massive liquidity comes in again. But it's not just the bond market that's massively collapsing here. Hedge funds are also on the verge of collapsing here, and the basis trade is about to explode. We need to take a very close look at this. We are experiencing a rapid rise in bond yields that we haven't seen in nearly 50 years. We now see that the 10-year bond yields in the USA are over 4.5%. This is absolutely shocking. And at the same time, the S&P 500 is in free fall, and that's a sign that something is up. Bonds are skyrocketing, and the stock markets are crashing down. We can see it here. The 10-year bonds have had a rally of plus 15% in the last 3 days, so there's an increase here. And this is partly because China is selling US Treasury bonds at a record pace. And they can still sell a lot more treasury bonds. So they still have a lot of treasury bonds in the background that they could sell here. Probably more than 700 billion. So this is just the beginning here. And if the Fed doesn't step in now, things could break in several places. This can trigger a bank collapse. This can trigger a hedge fund failure. And the bond market is on the verge of falling. Max Kaiser says about this, perfect conditions for Bitcoin. Don't try to fix the money in banks. Too far gone. That's not going to happen anyway. It's no longer possible to save the whole thing here. Use this crisis to introduce a Bitcoin standard. This is his big warning to the Federal Reserve, to the USA, etc. The system is now at the end, now on the brink of collapse. And now we need to switch to a Bitcoin standard. This means Bitcoin will benefit greatly from this. This is not an investment recommendation, but it's really crazy what's happening here. Check this out. Zero Hedge says we are moments away from hearing catastrophic news about a hedge fund collapse that will, of course, need to be bailed out again. This means it really looks tough here. In the bond market, he continues to write that if the recent disruptions in the US Treasury market persist, we see no other option for the Fed than to intervene with emergency purchases of US Treasuries to stabilize the bond market. Emergency QE. And this is the quote from Deutsche Bank that they basically posted here. So the printer is warming up. And every time in the past, we have also seen that the Bitcoin price only escalated massively when QE took place. And the crazy thing, QE might not only take place in the USA, or rather, it very likely has to take place. It could also take place in Japan, and it could also take place in China. This means we have several central banks simultaneously under massive pressure. Peter Schiff says about the current situation, as I have warned before, the bond market is crashing. The yield on the 10-year bond has just reached 4.5%. Meanwhile, we are above that, and the yield on the 30-year bond has just reached 5%. Without an urgent interest rate cut tomorrow morning and the announcement of a massive QE program, there could be a stock market crash like 1987 tomorrow. So this is really crazy what's happening right now. It's not just one or two voices talking about a bailout, a collapse, QE, or interest rate cuts, but almost the entire market is now certain that something could break here in a few minutes, hours, or days. Jamie Dimon also says that a recession in the USA is now the most likely outcome of the trade. President Trump is. So Jamie Dimon from JP Morgan is also not necessarily bullish. As mentioned, all of this has a positive impact on Bitcoin. We also see that Bitcoin is currently performing better than traditional markets in some cases. That's very good to see. So Bitcoin is even slightly in the positive on a daily basis. And now there's a ultra interesting statement from the stakeholder who simply says, we're not in 2008, it's worse. So, he assumes that the current crisis is worse than 2008. The bubble of global government debt is bursting right before our eyes. There are two possibilities: total collapse or the Fed buys everything up. The credibility of institutions is sinking to a new low. Neutral. Currency reserves like gold and Bitcoin are taking over the role of providing a safe haven for government bonds and completely replace it. This means either you let the whole thing massively collapse now, do a reset, a restart, or something like that, or you simply buy everything up, whatever it takes, all the government bonds here that no one buys anymore. The Chinese are dumping their government bonds all onto the market. Fed buys it all back up. You can bring the interest rates down again. You can clean things up a bit. This way, the hedge funds can also be partially protected because the basis trade is currently threatening to escalate. We can touch on that briefly later. The spread is just too large right now. The interest rates have risen too quickly. I just made a video about this recently, 2 or 3 days ago, that the Fed is already planning bailout packages for the hedge funds because they know something is up. And now the stakeholder is saying that Bitcoin and gold are actually going to replace what? US Treasury bonds. Because you can also see that the loss of trust in US Treasury bonds is definitely there, as it's not just the Chinese or China selling the Treasury bonds. But of course when there's turmoil in the market, then even regular people start selling Treasury bonds. And now he goes further and says, the Trump administration is seriously testing the ability of central banks to overflow the barrel with half-hearted measures. The interest rate cuts have not affected long-term yields as hope, driven them down. Now Besant's plan to lower yields through tariffs is failing. The volatility of bonds is at a crisis level. So stack hard money, stay solvent, and enjoy life while the central banks and fiat alchemists try in vain to clean up this mess, as Max Kaiser has already said about this turmoil. And this problem that has now been created here, it's almost impossible to get out of it. So to briefly summarize, we have rapidly rising long-term bonds. Then, the gross domestic product is likely to decline for several quarters. This is currently to be expected here. Inflation data is rising again. So not like Donald Trump said, inflation, everything declining and so on, everything under control. Then we have the fourth largest tariff wave in over 100 years, which of course also leads to uncertainty in the market. Consumer sentiment at pandemic levels. Now, in addition, starting from earlier, I saw the statistics that corporate bankruptcies in the USA are also at a record high again. Sixth, we have the bond market and the stock market. And now the big question is, what is the Fed doing here at all? Is the Fed intervening or is the Fed not intervening? All signs now point to money printer go. And that means Bitcoin Valhalla. Let's fucking go. And now there was another hammer here, and this has to do with the hedge funds. That means what we have looked at now is the potential bond market that is threatening to collapse here. And, of course, with the bond market, the banks are connected again, because the banks use the bonds as collateral, and so on. This means there is already an interconnection here. This means banks are in danger. The bond market is in danger. And now comes the next big shock. Here is an article from Zero Hedge, which says an absolutely spectacular meltdown could be coming our way. The basis trade is currently exploding, and multi-billions could be liquidated here. So, we have a multi-billion liquidation panic approaching us, and this is related to the hedge funds. I already explained this to you in one of the last videos 2 or 3 days ago. The basis trade. But here, maybe to elaborate on it very briefly, why this is now dangerous for hedge funds, why hedge funds are now threatening to collapse, and why there are bailout packages. I mean, this is, of course, completely unfair. I mean, you have to pay for your losses, and the hedge funds get them. Then bailout packages. But that's very likely what it will come down to. In fact, I asked Croc here, and there's a very, very simple explanation. I once asked, explain it here for kids, what the basis trade is. Imagine you buy candy for $1 and sell a delivery promise for $1.05. That's how the Treasury basis trade works. Hedge funds buy government bonds cheaply and sell futures. Later, they buy them back at a higher price. They borrow huge amounts of money for this, so small price differences add up. But if prices move in the wrong direction, they could suffer large losses. They might even need a $1.8 trillion bailout from the Fed. It's risky because they borrow so much money, even though the bonds are absolutely safe. Summary. Hedge funds buy cheap government bonds, sell futures at a higher price, and they borrow a lot of money to profit from tiny price differences. This is risky. If it flops, they might need a $1.8 trillion bailout from the Fed. This is the explanation for 7-year-olds, so that everyone really understands. And now this is the very, very big danger, that this basis trade is currently at risk. And then the question is, okay, how does this relate to the Fed? How does it relate to rising interest rates? The Fed influences interest rates through its monetary policy. We know that it can influence short-term interest rates. If they raise interest rates significantly or surprise the market, this basis trade can become dangerous. But we don't see that the Fed has changed interest rates here. Rather, because the Chinese people or China are selling government bonds here. It's simply that the interest rate has gone up massively. That means the element of surprise is definitely there now. Many of these basis trades are financed with borrowed money. We have just established that as well. And the problem here is that such large quantities are being moved. And then even very, very small interest rate differences can lead to massive panic or very, very big problems. And if the market becomes unsettled, investors may be forced to liquidate their positions. This leads to turbulence in the bond market. And we have already seen exactly what happens when the bond market crashes. Now, additionally with the bond markets, some hedge funds had to forcibly liquidate, and some had to meet margin calls, and so on. And the Fed says here that Zero Hedge is not to blame for the tariffs, but it allowed this leveraged basis trade to become too large. Now, with interest rates suddenly rising sharply, the 10-year bonds are now over 4.5%. And then it could happen that this trade might explode. This can lead to a collapsing market. In other words, a rapid breakdown. In short, Zero Hedge criticizes here that the Fed has failed to monitor risks in the financial system, especially with these highly leveraged basis trades. And this could now become a big, big problem. That means we are now seeing exactly the opposite of what Donald Trump originally intended. That means he actually wanted to bring down the interest rates at the long end. Now a few people have written in the comments something like, yes, he wanted exactly this, for this escalation to happen now. Because now the interest rates are going up massively. And then the Federal Reserve would have to step in. And then the interest rates would go down massively again. But I actually don't believe that this was Donald Trump's goal, to bring the bond market to the brink of explosion and for China to massively sell government bonds. I think he might not have anticipated that. I believe the idea was more to actually bring down the long-term interest rates. It looked like that for quite a long time afterwards. And then simply to force Zero Powell to act, sooner or later, in the short term, to lower the interest rates. So, I do believe that this was the plan. I don't think Donald Trump's plan was to completely crash the bond markets, crash the hedge funds, or put the banks under pressure. And then, I would say, to have the Federal Reserve step in with QE. I do believe he initially wanted to start with normal interest rate cuts. He always talked about interest rate cuts. He said, Zero Powell lowers the interest rates, Zero Powell lowers the interest rates. But he never said, hey, Jerome Powell, turn on the printing press, do QE here, do illegal state financing here. Donald Trump actually never said that. And I already told you yesterday, the big winner of these conflicts, trade conflicts, etc., will be Bitcoin. The Bitwise CIO also said yesterday that everyone loses here. China loses, the USA loses, Japan loses, Europe loses. Everyone loses, but who wins? Bitcoin wins. And if you're bullish on Bitcoin now, I'll put a link below for you too. 21 Bitcoin, where you can buy Bitcoin easily, safely, and simply. Tickets with the code Bitcoin Hotel, up to 20% off the fees when buying Bitcoin. It could really be that we are on the verge of a very, very significant moment in history and financial history. And if you want to secure your Bitcoin to the highest possible level, I'll also include a link to a hardware wallet where you can store your Bitcoin easily, safely, independently, from platforms, exchanges, etc. You can store your Bitcoin with the highest security precautions. There's also a 10% discount on the purchase of such a hardware wallet with the code Bitcoin Hotel. Guys, write in the comments below what you think about the crazy situation. Until then, peace out.